Further to Tim Lee's story, the wool rocket continued last week at sales in Sydney, Melbourne and Fremantle. Buyers from China were dominant, but there was also strong interest from India, Europe and Korea. The Eastern market indicator lifted more than 2.5% for the week to close at 1,286 cents a kilo clean. Now that EMI is up nearly 25% since the start of the year and a massive 46% up since the start of the season. Wool, wheat, cotton, sugar, beef, wherever one looks these days, the food and fibre business appears to be booming. Prices are either exceptional or at least very, very good, and the fundamentals point to this strength continuing through this year and beyond. One of Australia's leading agribusiness experts is Professor John Chudley. He told Landline there's a worldwide shift in attitude towards agriculture.
It's very rare, and I don't think we've experienced it before, that all the commodities, not just our food commodities, but our fibres as well, and our minerals, have run into a situation where they're in relatively short supply. And this means that the competition for land use now is real competition, because we don't have a situation where one enterprise is chasing more land because it's the more profitable one. So farmers now have a tremendous choice in land use right throughout the world.
So are these actually seminal moments for agribusiness, or just another part of the boom and bust cycle?
No, I think there's a worldwide change occurring at the moment, and I think we're seeing some massive changes in the whole attitude, not only of farmers but of the populations in many countries and of governments towards the agricultural scene. For too long, I think governments and populations in general have assumed the cheap food that we managed to produce with technology for the last 30 or 40 years would continue forever. Unfortunately for the population, I think that era has come to an end, and we're now facing a period of a massive adjustment in the way we spend our money in order to live.
And from what you say, Professor Chudley, it's driven by the most fundamental law of economics, that of supply and demand. Are Australian farmers well situated to cash in on this boom?
Absolutely, very well placed, and even though our dollar will continue to strengthen while ever commodities are strong, I think the price will be more than adequate to give farmers enough profit to bring in the new technology on a far wider scale that will be needed to continue to increase production.
Now, the international situation, Professor Chudley, I understand you have a somewhat different take on the problems in the Middle East, that is food, and the cost of food is part of the discontent.
Yes, I think the unrest that's occurring is not totally, but is partly occurring because of the food situation. I think in many of those countries, there's many poor people that are trying to live on $1 or $2 a day. And when you double the price of food, whether it's food aid or the food in those countries, then you get a lot of unrest with people who are finding it very, very difficult to continue to keep their very meagre standard of living up. And so whilst it may not be the total reason, I'm sure it's part of the reason.
Yes, I guess hunger would be a somewhat powerful motivator. Now, what about food security for countries? It's always been a factor with Japan. Are other countries starting to feel the same way?
Absolutely. China's been leading the way in this. It's been quietly building stocks of many of its commodities in order to ensure its future security. And even now it's moving out to other countries of the world, including Africa that we've mentioned, in order to secure future food supplies. And there's quite a lot of concern about this sort of investment occurring in other countries.
Yes, China seems to be everywhere. How active in Africa is China in agribusiness?
Well, they've secured some massive tracts of land. Whether it's good or bad depends on the attitude you take. Obviously, they'll bring technology and new techniques into those countries, mainly to produce food to take back to China itself. But in most of the arrangements that I've read of, there will certainly be a reasonable spin-off for the locals as well. We can only hope and see what happens in the future there. But even if the technology they bring in and the training they bring into the locals can spin off in a wider area in those countries, then that investment may be worthwhile. After all, most of those countries are very poor. the governments are not really interested in looking after the people in many cases, and they're unlikely to get the investment money from their own governments that's needed for them to become self-sufficient in food rather than relying on aid. So it's a very two-edged sword that only history will tell us whether it's been a good or bad development.
So finally, Professor Chudley, food, fibre, farming, agribusiness, good times ahead for Australian farmers and graziers?
I can't see any major problem, of course. With prices the way they are now, there's going to be significant volatility because this boom has brought the speculators in a big way, and as they move around in the markets, we'll see big jumps and big falls. But I can assure you that I firmly believe that the overall trend in nearly everything we produce in agriculture now is upwards.
Professor Chudley, thanks again for your time on Landline.
Thank you, Kerry.
I don't think I can recall a more confident outlook for agribusiness. Moving on now, let's check the sale yards, and young cattle remain in demand by restockers, while feeder steers are providing competition for processors. Prices were mostly positive. Meatworks are almost back in full swing after the start of the year problems. The dollar is still making the export business very, very tough. And all this action left the Eastern States Young Cattle Indicator steady for the week at $3.96. The real sale yard action last week was again with lambs. The pen at Wagga Wagga fetched $253 a head, a new national record. They were first cross Dorsets, weighing an average of 38 kilos. The National Livestock Reporting Service, in fact, reports that all lamb indicators established new records. Our indicator for fat score 2 to 4 lambs weighing 18 to 22 kilos went up 23 cents to close at $6.48 a kilo. And mutton headed north in hot pursuit, up 15 cents to $4.58. Once again, it's a supply shortage bumping into strong demand. Now, a butcher told me during the week that he's hearing constant complaints from customers about the lamb price. His response is that lamb is in fact his least profitable item because he just can't put a realistic or normal margin on it. Now, the live trade and business is a bit slow at the moment, but steady, with no indication of any change in the weights issue from Indonesia. Steers out of Darwin are firm above $2, while heifers are also steady. They're fetching $1.90 a kilo. Now, before I leave livestock, a couple of intriguing newsletters emerged into my inbox last week. The first revealed the European Commission is working on a scheme for the electronic identification of cattle, and a meeting of ag officials in Washington next week will have the same subject on its agenda. Heading now to the futures trading, and first to New York, where the reaction to the record cotton prices has been absolutely brutal. Limit downs have been recorded on most days, with the market closing just above 181 cents, a dump of more than 22 cents for the week. Sugar was relatively firm, with longer dated contracts actually strengthening. Sugar dropped more than 3% but remains historically very, very high. Now to Chicago, where prices fell out of bed as traders caught the Middle East tensions to push ag commodity markets down alongside global equity markets. Hedge funds were the big sellers, liquidating contracts across the board. It's been called the Libyan aversion, and there's little relationship to fundamentals. The market simply has the jitters big time. Soybeans, wheat and corn, they all headed south. And stating the obvious, events in North Africa over the next week or so will be crucial for markets everywhere. And local spot markets followed the overseas uncertainty. Again, despite the solid fundamentals, prices slumped for wheat, canola and sorghum. And the futures markets weren't spared from the Libyan jitters. WA wheat for January 2012 and New South Wales milling wheat for the same month both had substantial falls. And finally, to Canberra's carbon pricing plans. The Prime Minister says agricultural emissions will be excluded for now. But what's not yet clear is that just how farmers might be able to offset the increased costs for things like fuel and fertiliser by being paid to actually capture carbon. The devil, they say, is in the detail. Now, next week, reporter Chris Clark begins a two-part series talking to farmers and scientists about the challenges and opportunities from climate change.
Nitrogen is critical for plant growth, but it takes energy to produce and apply. And nitrous oxide, which comes from the nitrogen crops can't absorb, is one of the most potent greenhouse gases.
We know from the perspective of greenhouse gas emissions that some of the nitrogen fertilizers applied to the soil will volatilize off as nitrous oxide. It's been estimated by various groups that this is about a third of all agricultural emissions in terms of greenhouse impact is nitrous oxide, because it has about 300 times the impact of CO2. So it's a very important greenhouse gas.
That's Dr. Rick Roush, one of the scientists Chris Clark spoke to at a recent climate change and agricultural conference in Melbourne. His story next week. And who knows, if an emissions trading scheme really does finally get off the ground, we'll be including carbon price quotes in our commodity segment.